Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at some of the other things we look at when we trade in the USE minis, and one of them is what we call a gap trade, where we look at how the market opened in relation to yesterday's high and low. This is also answers the question on why we look at the day session only, which is from 9:30 to 4:15 in the afternoon. If you trade a 24-hour chart, you'll never see this setup, because obviously 24 hours are 24 hours. So what we do is we look at the previous day's high and low and see whether today's market has opened above or below yesterday's range. In 7.5 we have a little tool here that shows yesterday's high-low close. So if I look at this for yesterday, which is actually Friday, Friday the 13th, in relation to Thursday the 12th in the USE minis, you can see if I scroll out that this actually puts on the previous day's high, low and close for the well, the YM in this case. You can see the low was down here, the high was our blue bar there, and the close, previous day's close, was in green. So what we look at is to see how the market in the first 3 minutes of trading, which in the YM would have been this bar here. See, there's our open there in relation to the previous day's high-low close. You can see it actually gapped up ever so slightly, but the first 3 minutes traded back below the previous day's high, which was at 9.46. So this we'd classify as an inside gap because it didn't make a clear move. If I look at the NQ, slightly different. If I scroll back to the previous day, put the high-low close on, you can see there's the previous day's low, we have the previous day's high in blue, and the close was underneath there in the green. But this case was slightly different because the NQ opened right up here. It opened on an outside gap up, and you can see how the first 3 minute bar was way above the previous day's high. So in other words, this is what we classify as an outside gap up. Now normally we like all three USE minis telling us the same thing, but this is quite interesting because we've got the two different scenarios in one day. So how does that help us? Well, normally what we suggest is if there's an outside gap up, it normally suggests there's going to be a strong move. In other words, there's going to be a continued move in the original direction, and very often we tend to get that move will start between at about 9:45 to 10:15. In this case, it actually started a bit late at 10:45. So in other words, we are looking for a continued move to new highs. So in other words, outside gap up, we're looking for the market to carry on higher, typically here after an initial correction. So here we'd be looking for long trades. The market came down, gave us an initial buy setup here. We placed the analysis on. This actually got stopped out for a -1 hour loss. Remember, at MTPredictor we like losses as long as they're kept small, and that's what our correct position sizing does. Remember, we vary the number of lots, contracts or shares to keep our initial risk small and under control. So this would have been a 1 hour loss. The market then came down a bit later to make a tier 3 buy setup here. We do the analysis. The market went up to the first target, and here the profit was 2.9R. This is why correct position sizing is so good, because the loss was at -1, the profit was almost 3 times greater than that, and plus 2.9. So that would have had a profitable trade overall. So -1 plus 2.9. Remember, the STF is actually blue as well, so we'd actually be looking for an uptrend as well. So we'd be avoiding these sell setups. So on the NQ, we'd have had a nice trade up into the first target there for plus 2.9 after a smaller losing trade. Now it's very interesting because we were looking at this in our webinar, our trading webinar on Friday, and we highlighted this as a potential long trade. But then on the YM, it was a slightly different situation, because remember I said that this was classified as an inside gap because the first 3 minutes traded below the previous day's high, which we had at 9.46. So here we'd be looking for a situation where the market was going to make a reversal, but then what's called close the gap. In other words, it'll go back to the previous day's close. And guess what the market did? It came up here, gave us a DP sell, then the market drifted down and came down. If I scroll out, look where it made pretty much the low of the day at the previous day's close. In other words, it did exactly what we anticipate. It closed the previous gap. So where's the advantage for MTPredictor over most other people that gap trades? Well, because they don't know where the reversal is going to occur. In other words, we were looking for the market to make a reversal to close the gap. So of course, if you were trying to sell the market down here, the gap close would only have been small, and obviously the market went against you to start with. So this would have been very hard for normal gap traders to actually play. But at MTPredictor we have the advantage because we can wait for a trade setup. Normally we look for higher degree resistance, or in this case we actually had an automatic DP sell occur a little bit later. Now I particularly like this one, and I talked about this in our training webinar, because not only was it a DP sell, but it's also what we call a VSA setup. In other words, this bar here, which was the 1027 bar, made a wide range move above the previous day, not the previous days, the previous high here, which was made earlier the same day. This was highlighted by our VSA indicator on our volume here as giving us unusually high volume. Now we don't look at all of these VSA bars, we only like to look at them when they breach a previous important psychological high or low. In other words, amateur traders are going to look at this and say, well actually this is a buying opportunity because high volume, bars move to new highs and off we go. However, MTPredictor had a DP resistance at this level here. In other words, this was an area of where we're anticipating a reversal to occur. And of course these are on the chart in advance, so you knew beforehand that this was an area to look for a reversal. As the market made our VSA bar or high volume break up to new highs, we were then anticipating that the market may well make a reversal. We also got an automatic setup here, so the setup on this bar wasn't triggered because the low wasn't taken out. We had another red sell bar here on the 1033 bar, so we can right mouse click and place our analysis on. Now interesting enough, the target for this particular short trade would have been around about here, which was almost, well, in the area of the previous day's close. So as I started this off with our inside gap trade right at the start, we're actually anticipating that the market was going to go down to the previous day's close. So that's why you'd be looking to then take the short trade here, and obviously because it was a VSA setup, you knew that the professionals were coming in and then we're going to move the market lower as well, and that's what the market did. That's why you'd be avoiding this buy setup here, because the gap and the DP trade and the VSA were all indicating the market was going to go down. So the market came down. The first target, you'd either take a nice 3.1R profit, or if you were playing for the gap, you'd come down to probably a slightly larger profit at plus 3.6R. So I just want to show you this in today's webinar, because MTPredictor is not just about standard and automatic trade setups where you just blindly take these setups without actually thinking about what the market's doing. We actually teach far more in our training webinars. We actually teach how the volume's unfolding, as indicated by this particular setup, so you can understand what professionals are doing with the volume patterns. We also look at the gaps to then understand what the market is most likely to do. And can you see how you can start to piece these things together? So in other words, on the YM yesterday, you would have known that this would have been a good one to take because you're looking for the market to close the gap, which is what it did, and you also knew that that was a VSA setup. You also then knew that it was slightly different on the NQ because the gap up was indicating the market was going to keep on going up to new highs after potentially an initial decline, and that's exactly what happened with a minus 1R trade, then a plus 2.9R trade a bit later on. So if we go back to the YM, looking at this, the rest or the whole of the day in view here, you can just see how good this trade was, because effectively our DP sell setup caught the reversal at the high of the day. In other words, this was here, it was telling you to sell in and around the high of the day. The market then came down and our profit target nailed the low of the day. So in other words, you were looking to sell in and around the high of the day, or set up that came in and around the high of the day, and then looking to take profit in and around the low of the day. So actually looking back on this, you couldn't really have done it any better than our automatic setup on our trade there yesterday. But I just wanted to do this video to show you how you can get a higher level of understanding on your trades above and beyond the standard and automatic setups once you learn how to use MTPredictor to much higher levels. So looking back on this, it was actually quite a good day on Friday for MTPredictor.